Greetings traders, this is Houston Trong from thetradingedge.org, and here's your weekly market outlook for May the 27th to the 31st, 2019. So this coming week is a shortened trading week. We have Memorial Day on Monday, and I'm sure many traders are happy to have the day off. It's been quite the volatile several weeks, and so that extra day of respite will probably give a lot of traders a lot more energy to tackle the markets for the shortened 4-day trading week. So we're still in earnings season. There's still a lot of headline risk, and there is some macro news. So on Thursday, there is that GDP number to watch out, the jobless claims number also on Thursday. And there are also some notable companies still announcing earnings. For instance, Costco, Dollar General, Dollar Tree, all announcing earnings on Thursday. So that should be an interesting day. So let's get into the charts now, talk about the week that was, and what we can look out for the coming week. So VIX, let's begin as we always do with our VIX contract. So with the VIX, it was actually quite an interesting week because it was a bit muted. We would have thought that we would have made some new weekly highs here, but if you actually take a look at the VIX, look at the weekly chart there, we had an inside week last week. So the question was, how do you break that inside week, right? And so we actually did break below last week's low, but we did not break above last week's high. We had a lot of sort of selling in the indices, but the VIX itself stayed within last week's range, so a bit muted. So what can you really say about that other than that the traders out there, they're not hitting the panic button yet. So right now, what's really happening in terms of price action, if we zoom into the daily chart here, is that we're playing pinball right between the monthly open down here. So there's your orange line, that's your monthly open. The blue line is your quarterly, and the purple line is your weekly. And so we're basically, sandwiched in between these various time frames, and so you're getting that time frame conflict. So on Monday we had a chance to go up, and it did so. And then it broke down, and it broke last week's lows. But then we had that news come out on Thursday, the bad news come out for in terms of, well, I don't know if you can call it bad, but the unexpected news on Thursday came out, and it basically rolled markets back down, and it pushed the VIX up. But the VIX, once again, could not take out by any, not even by a long shot, the highs of last week. So we have basically a week that kind of went nowhere for the most part. Basically opened up or closed up a little below where it left off. So right now, you got to see, because right now VIX is still trading in this time frame conflict. You're below the weekly open, below the quarterly open, but above the month. One final week left next week in terms of trading for May, right? So this week here, this is going to be the final trading week of the month. So next month, we'll talk about it more in next week's video, we're going to have a fresh board once again, and this is going to be a chance for either buyers or sellers to assert themselves and take control of the timescales. So right now, again, this is the week that was, right? Choppy, up, outside bar up, right? Could not hold it. Once it breaks down there, takes out all the lows. Then, the news, this week was basically defined by the gaps. So, if a lot of the chatter going out around right now is that there's a lot of overnight movements in the futures markets. So a lot of the moves are actually happening pre-market, and so that means many traders are waking up to find gaps in their charts. And so that's the trading environment we're in right now. There's a lot of volatility in the pre-market, the after hours, and we're left with gaps every single day. So right now, what can we look for on the VIX? Well, on the weekly chart, there's your inside bar and down, right? The fact that it could not close below this inside bar means this signal is invalidated in terms of that inside bar down sequence. But now we're left with a few things. Number one is on the daily. We have unfilled gap right there. Nearly got filled there on Wednesday. So there's an unfilled gap at 26.86. We have another unfilled gap up here at 32.45. So which way did they take it? Which way, which side are they going to try to close first? If the buyers can push above this week's this week's high, we get above this week's high there, that's going to create an inside bar reversal, which will put that pivot and then that gap in play. So look for that potential setup. Otherwise, if they can sell it right from the get-go, then they're going to have a red week. It's going to be below the quarterly open, and they're going to gun for that monthly open. So that's kind of what you need to be watching out for. On the 4-hour chart, it's basically consolidation on Friday. So with the Memorial Day weekend, in play. A lot of traders took off early, so we had that inside bar for the final 4 hours of the trading day. So nothing much to be glanced or gleaned from there. But you can see how it played out this week. We had this situation here where it goes. This is last Friday, right? We were saying on the weekly video, how does this resolve this outside bar inside? Because we like to watch that sequence. So this case here went inside, outside, inside, and it popped to the upside, right? So it opened here, got up to as high as, opened up there, and then it basically came back down. Then it went inside. So once it breaks below there and it gapped down, there was a inside bar reversal, right? So anyone who bought this inside bar break to the upside, once it comes back to the range, and I've talked about this many times when you look at these outside inside patterns, once it comes back into this range here, you have to watch out, because then if this pivot becomes in play, then that pivot, then that pivot. And so they took them all out. So this is the outside inside sequence, because basically it's always creating broadening formations. So anytime you have an outside bar like that, you're creating a broadening formation like this if it comes back through the range, right? And that's kind of what happened there. If you see how that plays in the kind of fractal time scale. Okay, so that's your inside bar reversal. That got that's set up here on Monday, breaks down on Tuesday, and then you have these gaps that find the rest of the week. So again, watch out for the quarterly, weekly, and monthly opens. That's all you can use right now as signposts. So on to, let's say, the SPY now, and how does that differ, or how does it look the same? So the SPY is in a situation now where you have full time frame alignment to the downside. So we've been watching the quarterly level and saying, as a buyer, or as a bull, you do not want to see this thing break below the quarterly open. And this week, we had a couple of sessions there where it stayed above the quarterly open, but you see on Monday, Thursday, Friday, we're closing now below the quarterly open. And now on the weekly chart, you can see we actually had a close below the quarterly open. So this is now significant. So for the month we talked about last week already, once an outside month is going to remain an outside month, right? So it doesn't matter where the bar ends, it's going to be an outside month, right? So there's your outside month. Now on the weekly chart, now you have an inside week. So it was kind of tight trading, right? So it was inside last week, and this is the kind of choppy stuff you can expect, right? So you got a gap here, a gap there, gaps there, and gaps there. So you're having gappy trading every single session. But even with that said, we had the big selling day on Thursday was down 1.22%. Again, not a lot of losses there, but certainly it scared a lot of people, shook some people. You still got that inside week. So even with all that selling, they could not break the inside week condition. So you have the inside week. So really for the coming week, you want to watch to see how does this inside week, how does it play itself out? Do we get inside bar and down, or inside bar and up? Now the cleaner thing would be if we get the inside break to the downside, right? Because we have quarterly down right now. It's below the monthly open. So if the week also breaks below here, then we're going to have momentum to the downside. We can take out some of these pivots. That's going to be an easy trade to go after. If it breaks up, then we're going to have time frame conflict once again, right? We're going to be sandwiched between the quarterly open and the monthly open. We're going to get stuck in here somewhere. So that could be a scenario as well, because who knows, we may not get the push we want until the month of May ends. But let's again see how this next week breaks. Okay, we break to the top side or the bottom side. On the daily chart, nothing much more to say other than what we talked about already. The gaps that kind of define the week. But as we said before, right now it's full time from alignment to the downside. You're better off selling than buying right now. So in this case here, like for instance, you can just see if you're just selling the touches of these moving averages, and if you don't know my moving averages, the green is the 20, the blue is the 8, and I think I have a purple one here. Yeah, there it is. That's the 50, and the black one is the 200. Folks who've asked in the past. On the 2-day chart, he had this condition: 2 inside bars in a row on the 2-day chart. So it's 4 days of inside consolidation, followed by a break to the downside, and they bought it back a bit on Friday, but again, it did close red. So you can still see here on the bigger time frames, things haven't broken down that much, because even if all the selling that we've had, it's basically a red month, we're only down like 3.77% for the month of May. So it's certainly not catastrophic. However, you're in full time from alignment to the downside now. So this could just be the beginning of something if they want it to be that way. So that's something you need to watch out for. So on the 4-hour chart, Again, you're going to get that inside bar for Friday, right? That's, it was a quiet Friday afternoon, so you're going to get that inside bar. So the question is, how do you resolve yourself on Monday? Which way does it break? Okay, and then just navigate based upon the range of the 4-hour bar here. Anything above there, you're going to be bullish on a short-term basis. Anything below there, you're going to be bearish on the short-term basis. That's going to give you a good magnet and a good bias. So you can just see, once you start breaking below the quarterly opens, as I've said in the past on the blog, once you get below the quarterly open and you get full time frame alignment, then you can short with impunity, right? So any pullback can be used on a lower time frame as a selling opportunity. Because look, all these pullbacks, inside bar and down, inside bars and down, these are all shorting opportunities against moving averages or against any other type of resistance that you want to draw in for yourself. So the time frame alignment is the most important part. That'll define a strong bias. Then you can use whatever measures you want to then begin to short in a sensible way. Okay, so let's now talk about Qs. On the Q chart, we have outside month to the downside, as well as full time frame alignment to the downside. Red month, red week, red month, red quarter, red month, red week. So Qs, solidly now below the quarterly open. So they could not hold it above the quarterly open. We only had one day this past week that was above the quarterly open, and they gave that up on Wednesday once again. On the daily, on 2-day chart, it was in these, the two inside days or two inside bars and down. Okay, so full time from alignment to the downside. And then to watch out for is if the right here, the shorts, they pulled an inside bar reversal on Friday afternoon. So right there, inside bar, it went up. The buyers tried to jam it up in the morning, but in the afternoon, the shorts broke it below this inside bar break to the upside. So that means if they continue to take control, that pivot's in play, then that pivot's in play. So the Qs are certainly breaking down now, and you can expect more selling so long as we can maintain this condition. Also, things can change again. On Tuesday, and the markets open up. There's a bunch of headline news that come out, and some more talk around the trade wars and the tech wars and the like. Then certainly, if there's good news, that could change the charts dramatically. So the job is to simply follow the price, right? And we want to give ourselves some markers, some lines in the sand to help us navigate. And the best thing you can probably do at this time frame is use the different time scales to give yourself perspective. Okay, let's go on to the Russell. So the Russell, definitely one of the weaker charts. Here, like the rest of the indices now, full time from alignment to the downside. We've had 3 consecutive weeks of selling now. Okay, so there's your outside month. 3 consecutive weeks of selling, and it kicked off here with this outside week to the downside, right? And so the outside week to the downside, the outside bar, in this case an outside week to the downside, is significant. And this past week I did a presentation on the research that I did examining some of the market's major market reversals. And one of the key things when you just want to watch out for when you have this condition here, when you have outside bars and down, right, as I've talked about in previous videos, is not to overreact, thinking that it's going to be the end of the world just because you have an outside bar, because you can have an outside bar that goes back up and then goes back up again. But here now you have an outside bar that's gone down, and now it's gone down again. Okay, so right now the buyers or the sellers are in control. You see this outside bar here? When it went up, as soon as the low of this outside bar got taken out by this bar, sellers were in control. So the sellers pushed it down, then they made another red bar. This third week in a row now is a third red bar. Until you have one of these highs taken out, this high here, right? So until they get this week's high taken out, the sellers remain in control. So right now, as I said in the past, the Russell, you can short with impunity because it's been trading below the quarterly open for some time now. If you look on the daily chart, you only had that one day back on the 16th of May where you had a close above the quarterly. But ever since that date, most of the past couple weeks have been spent below that quarterly open. Look at this one here. So we popped up there, right? Hit the 20 period moving average. They sold it right there and came right back down again through the range. So continue to look for that for the Russells. You want to be looking for these pullbacks as shorting opportunities so long as we can maintain full time frame alignment. So use the lower time frames like this. Look at this sequence here. Right? So here's your outside bar and up, breaks down below here, and there's a short back down again. Outside, sorry, inside bar and up. So I meant to say inside bar. Inside bar and up. Okay, there's your consolidation. It breaks there. Inside bar reversal. That's a failure, right? It's a short and breaks back down again. So that's the type of great opportunities there are by looking at the lower time frames with the macro trend. Okay, so here's a short with full time frame alignment, right? So inside bar up, it fails, right? So the bars, once it breaks below that low, the bars have failed to hold control and it collapses back down. Plenty of time to get into that trade. So in terms of the 4-hour chart here, once again on the Russell, is you have that consolidation. So which way do we break on Monday or Tuesday, excuse me? We need to watch for that. The 2-day looks like this. Just again, this is the weakness of the Russell. Inside bar and down. So like the other two, we had the inside bar conditions. This thing's breaking to the downside. They did buy it back a bit on Friday because it gapped up, but again, the trend is definitely down for the Russell. So look for more shorts. Dow, same thing. Dow's had its worst run, I believe, now since 2011. So I think it's had 5 consecutive weeks now where it's kind of underperformed. And so the Dow doesn't have an outside month, but there's nothing to brag about because that just simply means you weren't even strong enough to take out April's highs. So basically, as soon as May kicked in, they took over, the sellers took over, and once it broke below the quarterly open, you had that full time frame alignment to the downside. The Dow is still, I'm still expecting this pivot to get taken out. So right there, it came really close, right? 252.46. 252.46, we got within, again, 252.59. So this red line here, 250.46 is still in play. That's a pivot that is bound to get taken out, especially since we're trading full time frame alignment to the downside. So the Dow and the SPY are similar in the sense that they have inside weeks. So watch the Dow and the SPY to give you a bit of a heads up on your on which way to play things, because we want to be watching which way they break, and if they break in the same direction, then you're gonna have more confluence and more confirmation and more conviction for that direction of the trade. Okay, so there's your inside bar on the Dow. 2-day chart, same thing as we had on SPY Qs, 2 inside bars followed by a break to the downside. Okay, so now again, just watch for the break. Which way does this inside week resolve? Okay, now let's talk about oil. Oil had a tough week, so it had a strong close. It was up close to 2% on Friday, but nowhere negates the selling that happened earlier in the week. So on Thursday we had a 4% down day, and on Wednesday there was that close to 1.7% down day. So I've been saying, on oil, you got to watch out for this pattern. So there's the outside inside. It broke to the upside. It's coming back in now. So this signal is getting close to actually getting invalidated if it pulls back below last month's high, which is 68.67, right? So it's coming back in, still not yet, but so that means you still have the time frame alignment and that potential pattern playing out for your UK oil. But it needs to exert some strength pretty soon here because it's running out of room. Look what happened on the daily. Let's just first talk about the weekly. The weekly is an outside week. On the daily, we have this situation. So on Monday, outside bar. So that means pay attention. Okay, so if something's outside bar, it means pay attention. Inside bar, look, something's gonna happen. And certainly what happened was it broke to the downside. So Wednesday, boom, breaks below the low of that inside bar and it falls apart. Look where it bounces. It bounces right off of the quarterly open. So that's, again, that's open holds. They cannot turn the quarter red yet. So it's still a green quarter. So at this point here, you want to wait and see how they resolve this inside bar on the daily chart. And can they maintain this quarterly open, or does it turn the quarter red? Okay, because UKOIL, certainly it's been driving. It's been stronger than many of the actual oil equities. UKOIL, the actual crude oil itself is actually quite strong. I just watched on UKOIL for a second. On the 4-hour chart, you have this outside and up pattern. So this thing, you want to just watch the 4-hour chart and see, can buyers continue to hold control. Simply watch, it's outside bar and up, so it's momentum. So as soon as one of these lows get taken out or invalidated or violated, then there's potential for it to come back down again. All right, so watch for that. The buyers can push it back up, and on steady strength, then that's a different story. But if they fail right away and the sellers come in and take out that low, we're going back down. Okay, and that we're not far from putting things in full time frame alignment right there. Okay, so watch for that, because that would really break things down in terms of oil equities. So oil equities, take a look at something like XLE, which I highlighted last week, which I said didn't look good. So XLE has been lagging the actual, the oil equities have been lagging oil for some time now. So the XLE, if you look on let's quickly look at the 3-month chart here. So you had outside, inside, and up, but it quickly, that breakout failed. It came back to the range very, very quickly. So, that's what we talked about last week's video, is that oil equities have been a lot weaker. This month, the low got taken out. So now you're full time from alignment to the downside. And this has been the case since the beginning of May. Okay, so this has been in a full time from alignment to the downside since the beginning of May. It all starts with this. So the outside bar, there's your weekly outside bar. There goes it down again. Okay, so the sellers are in control here. Outside bar, down, and none of the highs get taken out here. Okay, this high gets taken out here this week, like last week, but it turned into an outside bar, excuse me. And this past week, also an outside bar, reinvigorating the sellers, so that they're still in control. So next week, watch to see, which way they break this outside bar. Can the sellers break it down further and keep control of this particular price action? So right now, sellers are definitely in control here of oil equities. So the on XLE, just one particular interesting part here. What did I want to point out here? Yeah, so this one here. So here's the sequence: inside bar, outside bar, right? And then there, they gap it down. So sellers are definitely in control. So that's Thursday. And so here we have this large gap now, right? Sitting in between Thursday and Wednesday. How does the gap fill, if at all? Because right here now, a lot of people got trapped. If they were hoping to get out in a smoother fashion, well, they're underwater right now, and they're trapped in their positions. So here, if you take a look, right, so it popped up, hit the 20 period moving average. It did an up-down reversal. This is your last chance to get out here on Wednesday, then a gap down against you if you're holding any oil equity positions, and then they squeezed them, right? So basically from the moment they opened, they just sold it off. So all day here, just imagine, if you're in their shoes, if you're long some sort of oil name, you're really getting squeezed here, because if you're trying to get out, you cannot get out without taking a bigger loss. So that's the precarious nature that the oil markets are trading in now. The sellers are definitely in control as pertains to oil equities. Okay, let's talk about TLT. We talked about this last week. The long bond. The long bond is on fire now. So yeah, when I talk about on fire, it's all relative, but these are big moves that are happening in the long bond market, and it's notable. So we're up 3.3% now, and that means a lot of people are rushing into bonds. So there's a condition: outside bar, inside bar, and it broke to the upside. We talked about last month, right? We said that's the next pivot in play, and it blew through there quite easily when it gapped up on Thursday. So that selling day that we had on Thursday, people rushed into bonds. It was up, anytime you see bonds up, over 1%, that's unusual. Usually they don't trade like that. And so we had a real rush into bonds. So the trend now of bonds is up, and they're going after this pivot here now. Outside bar high, 128.59. So let's just quickly draw a little line there for that one. And that's the pivot. That's the next pivot in play there. And as you can see, we're playing out this Browning formation, right? So you see it, it's bang, low, high, lower low, and now if we can break above here, we're going to touch that higher high. So bonds have a long way to go still. We're not, if they want to really push it back up, they certainly can. So continue to watch the long bond. It tells a lot about the people's perception of safety. And so keep your eyes on that. Thursday. If you haven't traded a lot of sell-offs before, if you're looking to see if there's panic in the markets, just watch the long bond and watch gold or gold instruments like GDXJ or junior gold miners, or GDX, which are the gold miners, or the leverage ones like Nugget, NUGT, or JNUG. JNUG. Those were, they were really buying those quite heavily in the AM session. Nuggets and the gold miners did give some back later in the session on Thursday, but they never gave back any gains on TLT. So the long bonds, people are still floating into those. Okay, submerging markets or emerging markets, EM. This is one that I called out a while back, right? And I said, watch out once you take out 43.35, because we know this to be an outside bar and it goes up. Once it breaks below there, as I've said already, that means momentum's left the building. And when they take that out, they're going after that pivot. Now they're going after that pivot down here, these and these. So that's what I've been saying is watch out. Once that low gets taken out, the sellers are in full control because we have full time from alignment, right? Ever since the beginning of May, right there's the beginning of May on the daily chart. Actually, excuse me, right there. That's May right there. Once it broke below, so we had outside bar and down, up, and then broke below the weekly low there, and monthly low, monthly open, weekly open, quarterly open. Then it's just been relentless selling, 43.35 being that monthly low. So now it's coming back. It's looking to go back to the other side of that particular range. So just continue to watch the EM, and they're really beating up these Chinese ADRs. So the Baidus of the world and the Babas and the JDs. These have been great shorting opportunities. When you see EM breaking down like that, then pretty much you can use this as a proxy for your basket of Asian ADRs, and you can short those ADRs. Let's talk about something that's shining a little more than the emerging markets, and that's Bitcoin. This thing has been on a rally. So still looking for this high to get taken out here, 8506.7. We've drawn that line for a while now, and I've just been using these pullbacks as buying opportunities, and I've been posting that in the chat room that I trade in, and it's just very simple trading right now because the strength of the trend is so strong, right? So I mentioned once we broke out of this outside inside consolidation, it created this sequence here. Okay, that run up from 4210 to 8053 where we are now. But you see this condition here when you have price action gap up like that, then the moving averages gap up or spread apart like that. That's a very, very strong trend. You can just tell, if you're just a trend trader, these are the markets you love, because you can just tell when you see these types of charts. Momentum traders and trend traders are using things like moving averages as areas to buy, because every time you touch one of these moving averages, they pick some up, they just buy some more, right? You can just see the strategy is as simple as just buying every time it touches the line or touches and comes back above it again. They're using that as buying opportunities, and this past week was no different. So this past week and last week, people were very scared, saying there was some sort of crash or some sort of sell-off. And yes, it was a big sell-off 2 weeks ago, but not relative to cryptos. So that was a 3.5% down day, another 5.6%, another 2. So you had plus 10% there. That's a easy correction for most markets. For cryptos, it's not significant. 3 down days in a row, perfect buying opportunity. 3 selling days in a row, you buy it right there. I shared that trade already on the 12-hour chart. You could have taken it on the daily chart too. Remember, there's your outside bar and down. Once a high gets taken out, that means momentum's left the building. They're going to go back out and take out that range. They haven't been able to take out this high yet. I think it's just a matter of time because the week is working against you. This is what happens. So I'm long from down here. I'll just show you I think I showed you last week on the 12-hour chart. I believe I took that first trade was down here. Actually, I took it on the 4-hour. You could have used the 12 as well. But yeah, I took the 4-hour. So there's the selling. I pick it up right there on an inside buy reversal. Okay. So inside buy reversal. And now, my target was this high here, 83.52. Okay. So the reason why it doesn't take it out is because it simply runs out of time. So back to the daily chart. It comes up here, it comes really close, but it runs out of time because the new week starts. So once the new week starts, if the buyers can't take control right away, you're going to have a red week. And that's what happened. On the lower time frame chart, let's go back to the 4-hour, the buyers run out of time. So here, there's your 4-hour. This is the end of the week. Here's the beginning of the week. Right there, right? They try to push it up. New week starts, and the buyers cannot maintain control, and so they turn the week red. So now you have time frame conflict. Okay, so you have a quarter up, month up, but now week is red. And so you just have to be aware of that. So until you can take out the high of the week, it's very hard, and it's going to act as a natural level of resistance, because some people who are looking at just, let's say, a weekly chart, they're going to see this. Here's the weekly chart. Okay, they're going to see that. They're going to see a red week. Okay, so to them it's red, and until they can change that condition, it's nothing too bullish until that changes. But look again, we got an inside week on Bitcoin. So this coming week, which way does this thing break? Now, given the strength of this bar right now, it looks like, a strong momentum inside bar. We break above this week's high, we have the potential to climb higher. Inside week up to the upside, that's momentum, because you're closing on the top part of that range here. The previous bar is also green, so it says momentum. We're trading momentum right now. People like trading momentum. People like chase, so we're gonna break above that, and we're gonna possibly get some more buyers lured into the markets, as people like chasing cryptos. So again, just to review the technical setups on these things, it's very easy trading, by the way, as I mentioned before, right? So there's your pullback, there's the buying opportunity. Now this week they also had some selling. Guess what? 3 days in a row again. Look, so last week we had 3 days in a row selling, right? Outside bar down, and then you buy the high back up. Here, 3 days of selling. Out inside bar inside, and it breaks to the downside, and then it's going back up again. So you could have taken. I prefer to take the 4-hour chart. Depends which chart looks better, but the 4-hour chart was really nice this week, as it was last week. Look, so last week I showed it already, right? So there's the inside bar reversal right here. Inside bar down. Once it breaks above here, that means the sellers have lost control and it goes back up. Same thing this week. Inside bar down, comes back with looks like a hammer. Once this high gets taken out, buyers retake control. Okay, and it just shot back up again. Easy trade. I've taken some off here now because I know that it's not that I don't know, but I just I have a bit of a doubt around that it being able to take out the weekly's high, because you have the time frame conflict. So I've unloaded a lot. So now I'm just gonna wait for the new week and then see what unfolds, and maybe take another trade around that. Okay, so let's go to total. And total is looking very strong still. Like the Bitcoin chart, total is obviously we've talked about enough now that you should know that total is basically a representation of all the crypto coins aggregated. And so we have a very strong chart for total. So basically the pullbacks are being bought into these moving averages. People are simply buying moving averages right now, which just shows you the simplicity of this trading right now. Because when you have this type of momentum, you don't have to overthink these. You don't have to overthink them. You just buy. Now we still have another month or so left in this quarter, so things could change, and there's a new month coming next week, at the end of next week. So these charts could change a bit as we have shift in some of our time scales where they open. But for now, until the end of the month, man, just continue to play that trend to the upside. Inside week on total. Okay, let's talk about just a few more charts, and we'll wrap things up. So CBOE was one that I think is an interesting chart. I talked about last week, and it was out of Play and GoDaddy, which had been two other charts that I had mentioned. Those had invalidated quickly around their signals. What I meant by that was they had an inside bar, outside and inside condition that broke to the upside. Play and GoDaddy, they all invalidated because they came back to the inside quarters range. Now CBOE, on the other hand, is still in force. This pattern is still in force. So you have this outside, inside, and up sequence now playing out, with the potential of this thing taking out this high. So CBOE looked pretty good for the most part of the week, even on that rough selling day on Thursday. There's your selling day on Thursday. It was only down a percentage and a half. But here's the tricky thing on CBOE, which is why you have to pay attention to these things. So on CBOE, there's your outside, inside. Okay. On Thursday, when the markets were selling off, CBOE actually not gapped up, but it actually popped up. It opened up there and went higher. So it broke above this pivot and that pivot. So it took all those pivots out and then came back in through the range. This is what I explained earlier in the video about the importance of being diligent and watching for this condition, because this is what can create outside bars. So this situation here where you have an outside, inside, it's a very, very common pattern where if the momentum runs out, so they take out these pivots, the sellers take over. As soon as it comes back into that pivot high, they're going to go after that pivot, that pivot, and that pivot. And that's exactly what happened. You can see here, it goes right back through and then takes everyone out who got long in that sequence and who put their stops below these areas. Now Friday we had a down bar, but green. So now if buyers step in on Monday and take out this, or excuse me, Tuesday, and take out this high, there's potential for this thing to come back and take out this pivot high again. But this is why chasing into highs is always so dangerous, because if you run out of momentum, you come back through the range and you create that situation there. Okay, so a little more maybe a good way to maybe demonstrate it is by looking at a lower time frame chart. So on the 30-minute chart, this is what you have here. So there's that day. Okay, so the markets are selling off on Thursday. So think about it. You know, the contrast here is that this thing's going up while the market's going down. Now, so it opens up basically flat. You know, this is where it closed, right around where it closed the previous day, and pops up outside bar, takes out all the pivots, right? So now you're at these highs. There's nothing to go after in the immediate vicinity. It goes inside bar, and then it goes outside, inside, and down, and rip right to the downside. Right, so there's your outside, inside, and down to the downside, and they take out all the pivots. On Friday, look at the counter. You know, outside and inside, right? So that's kind of like the mirror reversal of this situation, and back up, rip. So here it's got the weekly open right now, sitting right there as a support. So it came back down, touched it, and it goes inside bar back up again for the last hour and a half of trading. But it's tight trading right now, right? It's very tight stuff because it's kind of trading. The overall market's not helping CBOE by any stretch of the imagination, because the markets are weak. The fact that CBOE is still grinding higher, it's you have to wonder how long can it continue that, especially if the markets get significantly weaker. So something to watch out for if you enter into these longs, if you enter into any longs. Okay, so again, just be very mindful right now, diligent, because you have SPY and Dow inside week this week. Pay attention to which way they break, and if you're holding overnight swings and long positions, just be careful that you want to be diligent that the overall markets are not going to harm those positions. So I'm just going to show a few more charts here to wrap things up. Let's talk about 4 more charts, interesting ones. More bearish tone this week. So here, let's talk about this ETFC. Okay, E-Trade, outside and up. This past week, it broke below the quarterly open and sitting below last month's low as well. So now they're going after that pivot. So ETFC, look for pullbacks to short into, especially if you can stay below the quarterly open. They're going to go after that pivot there. Same kind of play. CRZO, oil, right? We know how weak oil equities is. This is going to be an easy one, right? They're going to go after that pivot there. So outside and up. Now they're going after that pivot right there. Okay, so on a short time frame would be a good one to take advantage of. Goldman Sachs, same situation. It broke below last month's lows. Full time frame alignment to the downside now. Outside, up, come back down to take out that low. And another one that's going to be a good one, AMAT. This is got some range to go after. So outside up, they lost the momentum right there. Now trading below last month's low and below the quarterly open. So using pullbacks to get in and getting to that pivot there as your first target. All right, so enjoy the Memorial Day long weekend. I hope you have a great trading week, final trading week of the month, and I wish you happy trading.